said I need you guys to highlight a supply zone on the weekly chart.
Okay.
The way you highlighted your zone, there's nothing wrong with it, right? But you just need to work on perfecting, like, so that you draw your zone perfectly. Of course, you're still starting with the supply and demand, so it's bound to be. You see, you're not going to be perfect from the word go. So I'm going to show you. I'm going to illustrate to you how you can draw your zones correctly to the pip, right? The supply zone that you marked on CHF-JPY is correct. But now, in the future, when I give, say, an assignment to say, okay, let's highlight this supply zone, let's highlight this demand zone, what you need to do, the first thing that you need to do, when you go to your chart, you see, we've got the candlestick chart and we've got a line chart, right? You see up here, we've got a candlestick and a line chart. You've got those on your platform. Now, what you need to do, what you need to do is, we always do our analysis using a candlestick, but when you want to highlight your zone, switch to a line chart quickly. For the first time when you're analyzing an asset, like right now we've got CHF JPY weekly chart, you just switch to a line chart. You see, that is a line chart for CHF JPY. Now, what you just need to do, you grab your trend line drawing tool. You can clearly see we've got these turning points in the market. You see these turning points?
Yeah.
Right. So what I'm going to do is I'm just going to focus on this area here, right? I'm going to focus on that area. So I'm going to zoom in so that you can see clearly. I'm going to zoom in. We're still on the line chart. So this is a zoomed in chart, line chart. Now, you grab your trend line drawing tool. The highest high, the peak, you see where the market turns there. You draw your line.
I see.
Yeah, you draw your horizontal line, right? You just make sure the price points are the same so that the line is straight. We've got 117.164, 117.164. Right. That is the highest point, right? So that's point number 1. Now, when you look on the chart, after this peak that has been formed, which is our higher high, we've got this lower low here, where the market traded again to the upside, right?
Upside.
If you look at this lower low, it was broken here. Then market went down.
Down, okay.
You see that price action. Now, what you need to do, you grab again your trend line drawing tool, then you draw your line from the higher low that was formed and broken to the downside. This is for a supply zone. You draw your horizontal line. Let me just make sure my lines are straight. 037. Once you've done this, you grab your rectangle drawing tool. You draw your rectangle from the high that you marked first time to the lower low that you marked the second time. Once this is done, you switch back to your candlestick chart.
Candlesticks.
Yeah, you switch back. Now watch what happens. You see, I've switched back now to the candlestick chart.
Candlesticks, okay.
Yeah. Now look at this candle here. Look at this candle here. That's the candle that broke 1, 2, 3, 4, 5. You see, it broke through. So that's your supply
zone.
zone. This candle validates that this area here, you see, it validates that this whole area here, the shaded area, is an area where we should look for what?
Selling.
Selling. You see, that's how you highlight your zone. So you'll be anticipating that market, if it trades back into this range, you see, you are looking to be a seller.
Selling.
Yeah, you'll be a seller with your stop loss above these highs. You see?
Okay.
Yeah, that's how you define a supply zone. Now I'm gonna go to the USD CAD chart, and I'll do the same thing. This should always be your normal practice. Like when you are doing an analysis of an asset or a currency pair or a commodity that you haven't looked at in a while, just go to the chart, switch to a line chart. You see, I've switched to a line chart. Take note, you see this is a turning point in the market structure.
Yeah.
This is a turning point. This is a turning point. This is a turning point. But now I'm only going to focus on the last one, this guy here. That's the one I'm going to focus on. So I'm going to zoom in. Right? Then I'm going to grab my trend line drawing tool. Then I'm going to draw my line, extend it. And I'm just going to right click properties. I want the price to be the same. 617. Right. Now, can you see the difference now with the USD CAD? We don't have
Yes.
a higher high formed here where we can place the second line. Can you see we don't have that?
Yes.
Right. What you do now, once you have marked the lower low that was formed, before you put the rectangle, switch to your candlestick chart. Now,
Candlestick. Okay.
once you switch to the candlestick chart, you can see already the lower low is always, it is formed on the last down candle, right?
Candle. Okay.
And if I switch back to CHFJPY, you see that the high that we marked, the peak that we marked on the line chart, this guy here, see that guy?
Yes.
It's formed on the last up candle.
Candle. Okay.
You see, the last up close candle. Yes, we've got these other up candles here, but they don't close above this one here. So the same applies with a down candle. The lowest low that we mark using a line chart, like this, where the market turns, in most cases, that is a down candle that you mark. You are marking the last closing price of a bearish candle. You can even see right now, if I switch to a line chart, you see this low here. Let me highlight it for you. This one, you see this one?
Okay.
I'm going to place, I'm going to place my trend line, and I'm going to draw my trend line to the right. That low is coming in on a bearish candle. You're going to see once we switch to the candlesticks. Yeah. Then I'm going to switch to the candlestick. Can you see?
Yes.
It's coming in at exactly a down close candle. But now our focus is on the demand zone. Right. Now we are back here where we marked the last down close candle. You see now, since we didn't have a higher high on the line chart, you see this candle that comes after the down close candle, after the last bearish candle, this candle that follows.
Yes.
It massively moves away. It closes above this open. Now you need to mark the closing price of that candle. It's a bullish candle, that means it closed here. See, this is where the candle closed. I'm just going to make my line straight. I'm sure this one is, yeah, this one is correct. You see, the closing price of that candle that impulsively move away, it's the same candle like this down candle on the CHF, the down candle that moves. Once you've done that, you grab your rectangle drawing tool.
Rectangle. Okay.
Yeah. You see? So it means in this range here, when price comes back here, you are looking to be what?
Buyer.
Buyer. You see? So whenever you do your analysis, make sure you switch to a line chart first. You switch to a line chart on a higher time frame, monthly, weekly, and daily only. Don't use a line chart on lower time frames, because some of the levels on lower time frames, they're not going to be valid. They won't hold. If price comes back, price will run through those levels. But if you do it on a daily, on a weekly, and on a monthly chart, the levels they usually hold, and you're gonna get more trades off the same level.
Okay, sir.
Yeah, if you understood that one clearly, right?
Yes, yes.
Right. So coming up today now, we're going to talk about, it's not going to be much of a long lesson though. We're going to talk about fresh and original zones. This is now a continuation of the last class. So we're going to talk about fresh and original zones. Right. So fresh and original zones, these are areas of supply or demand that are created in the market, right? You need to be in a position to highlight, okay, this is a fresh zone or this is an original zone. How then do you validate if you want to trade from a zone? How then are you going to validate a proper zone from a zone that is not going to hold? So we're going to talk about fresh and original zone. Then we are going to talk about zone validation. There's 3 criteria that we use to validate a zone. So in this section, we're going to focus on some advanced concepts that will give you an edge when you're trading using institutional supply and demand. We have supply and demand imbalance levels on our charts, and it's these that we are going to start with, right? So when we talk of a fresh zone, what are we talking about, right? Supply and demand zones can be defined as follows. We've got what we call fresh or a new zone. This is a zone where price has not pulled back or retraced to yet, meaning the level has not been tested yet. That is a fresh zone. Then we've got a non-fresh. This is a zone where price has pulled back into at least once. If you look at USD CAD, the demand zone that we highlighted just now on USD CAD, it is a non-fresh zone because the past 2 weeks have been testing that demand zone. If you look at the supply zone that we marked on CHF just now, it's a non-fresh because, no, it's an original zone. Market hasn't gone back up to that supply. It just dropped. Then we've got a used up zone. This is a zone where price has pulled back to quite a few times. This zone will no longer be good to trade from. It means if it's a supply zone, it means the sellers at that zone, they're now exhausted or they've been depleted, they've been finished. So market can continue going to the upside. If it's a demand zone, it means the buyers that were at that demand have been used up. They can't keep holding the price from going lower. So eventually that zone becomes used up and the buyers, they give up, and then market is going to keep going to the downside. Then we've got an original zone. This is a zone that has been created out of nowhere and does not have any reference to any prior previous zones. Right? An original zone, it means it's a zone that has been created out of nowhere. Out of nowhere, it means market is either bullish, as in strong bullish. There's no pullbacks. There's no what. Market is just rallying, going, and then eventually you see a down close candle, but still the market keeps going higher. That down candle is what we call an original zone. I'm going to illustrate on the charts in a moment. So original and fresh, this is a zone. This zone is the same as original, but it's still fresh, meaning it hasn't been tested.
Tested.
Yeah, original and fresh. It's the same as an original zone, but it's still fresh, meaning market hasn't tested that zone yet. Right. How then do we identify an original level? Right? To identify an original level, when you open a chart, look to the left of the chart to identify an original level, because it means it's a level that has been created out of nowhere, right? Market is just going to the upside and then we have a down close candle, or market is going to the downside, then we have an up close candle. Draw a horizontal line and scroll the chart until you identify candlesticks which connects with your line. If that candle is part of another supply level you are looking at, then that supply level is not original. You never cut through candles. Like you see on the illustration that we have, market is bullish, right?
Yes, yes.
Market is bullish, but this can be a monthly chart, this can be a daily chart, this can be a weekly chart. During that bullish momentum, you get candles like this. You see this candle?
Yes.
That candle there is what defines an original level.
Level.
You see? It's going to offer us opportunities when price comes back to trade to the upside. You see? That is an original level. That's how you define an original level. If market is going to the downside, it means you've got a series of bearish candles, but in between you get one bullish candle. That candle is going to define a new original level. So this is an illustration of an original level to the upside, meaning this is a demand area. You see? Market is bullish.
Okay.
Let me grab my
Yes.
market is bullish. You see this level here?
Okay.
There. So when price comes down in this zone, you are looking to be a buyer. Right? That's an original level. Then we've got a fresh level. Same principle applies, but this time you look to the right to find fresh levels. Draw a horizontal line with the proximal line and take note of if price has touched the level. If price is not pulled back to the line, then it's a fresh zone. A fresh zone is identified by looking to the right, and if you see that price is pulled back into the level or zone or not. Good example, USD CAD. No, not USD CAD. Price is already pulled back into that demand. We are going to go onto the chart, then I'll show you an original level and a fresh level. You can see we had market pushing to the downside, right? Okay. Then we had this candle, which was our last down close candle. Then we had price push to the upside massively. This can be a weekly candle, this can be a monthly candle, this can be a daily candle.
Daily.
Yeah. Can you see the difference? I still have my original level here. You see?
Yes, yes.
That is an original level. Already market has taken off. A fresh level is defined before everything else has happened. So the moment you see this candle and this candle forming, the following day you have to anticipate market going to the upside. When market comes back now to this fresh level, then you look to be a what? A buyer.
Buyer.
Yeah. The same thing applies when market is going to the upside, and then you have a last up close candle, right? Like from the upside now, we've got this level here. Let me highlight that for you. You see, we've got this candle. This is our last bullish candle, right?
Right.
So we're going to draw our line from its opening price, right? And then we highlight the high.
No.
So this area here now, this zone, becomes the area where we hunt for what?
Sell.
Sales. Great stuff.
Okay.
You're catching up nicely. I like that. You see, when market comes here, we look to be a seller, because this candle, the bearish candle that came after this green candle, defined our supply zone. So we look to be a seller when market comes back. And if market comes back down into this down close candle here, we look to be a buyer.
Buying.
So this must always be done on a higher time frame. Don't use this on like 15 minutes or 30 minutes. Always define your zone using daily, weekly, and monthly. Yeah, so that you're gonna get opportunities to define your entries on H4 and on H1. That's where you define your entries, because if you use a 15-minute or 30-minute time frame to define these zones, sometimes the levels they're not gonna hold on lower time frames, because remember, higher time frame momentum always precedes everything. So now, how then do you get to validate a proper zone to say, okay, if market does come back to this zone here, how then do I say, okay, I'm going to trade this zone? There's three criteria that we use to validate a zone that you can trade from. There's three criteria. The way in which price comes back to a zone determines whether the zone will hold or whether it's a good zone to trade from. If price forms a semicircle or a flag pattern when it retraces, remember the flag pattern, the channels that we talked about,
Yes.
right? If price forms a semicircle or a flag pattern when it retraces to a strong zone, whether it's a demand or a supply, the chances of a bounce will be very high. Conditions to take a trade will be much favorable. A sudden or instant return to a zone, on the other hand, price will mostly not hold. This zone is highly likely to be breached, meaning it's not a good zone to trade from. So you need to be able to highlight whether market has returned in a circular shape or in a channel form, whether it's a bullish channel or it's a bearish channel. You can see we've got a fresh zone here, right? And price rallied away. And now it's coming back.
Okay.
You can see it's forming a what? A semicircle
Semicircle.
return to a zone, right? So you don't want to see price forming a new zone and then it goes away, then it drops like this, like a V shape.
Okay.
This level might not hold. This might keep going.
Straight
Yeah.
down.
Yeah. So a V shape return to a zone, that zone is not ideal, right? You need to see either a semicircular return to a zone, or you need to see a return to a zone using the flag, the channel. So this will be a bearish channel. You see price coming back to a zone. This area will be good for long position.
Up.
But if price rallies away and then instantly comes back, then that zone is not good for trading. So you use a semicircular and you use the flag pattern retrace to a zone. Right? So you can see here, I've got illustration. If you're looking for a long position from a demand, you need to either see, number one, a semicircular return to a demand zone, or you need to see a bearish channel return to a demand zone for you to be a buyer, right? If market suddenly
Okay.
moves away and forms a V-shaped return to a demand, this area is not good to buy from, because market can keep going to the downside. In case of short trades now, you also need to say the same, a semicircular return to a supply. This will be your supply area. Then when market returns in a semicircular, you need to be a what? A seller. If you see,
Seller.
if you see market come back to a supply zone using a bullish channel, you see this is our bullish channel. This is where you need to be a seller when it reaches your
Sell.
supply. Then you go. Then if you see a V return to a supply zone, don't sell. This area is not gonna hold in most cases. In most cases, that zone is not gonna hold. So when is a supply or a demand zone confirmed as a zone? Right? This is just a summary of what we've talked about. A zone is validated under two main conditions. A supply or a demand zone took out an opposing zone, right? A trend line connecting the last two peaks, swing high and swing lows, has been broken fully. Let me illustrate that for you using a chart. So you can see we are on a USD CHF. This is a H4 candle, H4 time frame. So we've got this area here. You see here.
Yes.
This area has been what? Engulfed. Remember from the
Okay.
last class, it's a demand zone that has been engulfed. Where is that demand
Engulfed.
zone? Where is that demand zone? If you look on the chart, it's here. You see?
Yes.
That's our demand zone. Meaning people would have been looking to be buyers when market came back here. And yes, market did trade to the upside, and even here it did offer going to the upside. But now, when you look at it from an institutional point of view, when you see this kind of price action, this candle has bearish engulfed this demand, right?
Demand. Okay.
It has been engulfed. That means it's now a new supply, right?
Yes.
A new supply zone. So that when market comes back, you see here, market did come back here, then it dropped. It came back
Yeah.
for the second time, then it dropped.
Group.
You see? So you'll be hunting for short
Sell.
trades. This is how you validate this candle here, this bearish engulfing candle validates this zone as a supply zone.
Sell.
You can even see every time market came back, every time price came back to this candle here. So we've got 1, 2, 3. Those would have been entries to the what? To the
Sell.
downside, selling. You see, those would have been opportunities for you to sell. And when it eventually came here, you can see that market came back in a what?
Let's
Circular.
see.
You see?
See half
Yeah,
moon. Okay.
yeah. It came back in a semicircular shape, thereby validating our entry to the downside.
Okay.
You see? So that's how you validate a zone. So I don't know if you have any questions before I go to the
Not
chart
at
to highlight for you a
uh,
fresh and an original zone.
not at the moment, sir.
Not at the moment. Yeah. So I'm going to send you these notes once we are done, so that you have something to read. And then when the video is done uploading on YouTube, I'll send you the link. So now I'm gonna go onto the MT5 platform. Let me just share my screen quickly. Right. Let me see. What do we have? CHF, US dollar index, Euro USD, JPY, weekly, monthly. Okay, let's go to daily and see. There's nothing interesting there. I'm trying to see where I can highlight for you a fresh zone and an original zone. So let's go here, weekly. Let's go to daily. Right, we've got one here. Right, I'm on Euro GBP. Right, I'm going to switch.
Okay.
I'm going to switch back to my line chart quickly. Now we've got this low here, and we've got this low here, and we have this high.
Okay.
Right, so I'm going to draw my my trend line from those two lows and that high. So firstly, I'm going to highlight the high. Right, let me just get this straight. Let me highlight the high, 92579. Right, now I'm gonna copy the line, grab it, draw my, highlight the low, and then the lowest low. Now I'm going to switch to a candlestick. Right, now once I've switched to a candlestick, this candle here, let me grab my, you see this down candle here?
Yes.
When this bullish candle formed, this candle became a what? An original level.
So. Okay.
Level or zone, yeah, it's one and the same thing. But when this bearish candle traded back into this, it means the zone has now been what? Tested.
Okay.
That was the first test of this zone.
Great. Okay.
You see? So that means you would have been a buyer because you know that this is a fresh zone in the market.
Okay.
So you'd have been a buyer in this down candle here because it's testing your what? Your zone. So you'd have been a buyer here. Right?
Okay.
Now from the upside, if you look at this candle here, the first bearish candle when market turned to the downside, it has been tested also, right?
Yes. Yes.
And then market traded lower.
Okay.
That now becomes a non-fresh zone because price has already pulled back into the zone at least once. Same applies with this candle here. Before this down close candle pulled back into it, this candle was a fresh zone. But once we had this candle pulling back into this area here, where it closed here, the level became a non-fresh zone, meaning it has been tested at least once. Same applies with this here. We've got a demand zone here. Price massively moved away. This is a daily candle. So if you go on H4, there is a demand zone. And price came back in a what? Semicircular shape.
Yes. Yes.
You see, price came back in a semicircular shape, and then it instantly rejected. You can see it already moved to the upside like 43 pips. You see?
Okay.
That's a lot. 43 pips is a lot. With the standard lot size, 43 pips, that's $430. So that's a lot.
Okay.
Now, if you look at the, let me see where they, you see these ones, these two highs,
Yes, yes.
right? We've got a supply zone here, right? We've got a supply zone here. You see, we've got a supply zone whereby market has been trading into it, and then it trades lower, trade into it,
Okay.
trade lower,
It's
trade
lower.
into it, and then it goes short. Now, here, this candle, bullish engulf of a what? A zone.
It's zone.
See this candle? It engulfed the previous supply.
Okay.
Now, what does that emphasize between this zone? It means this zone is now used up. Price is
Okay.
pulled back into this supply zone a few times, like quite a lot. We've got 1, 2, 3, 4, 5. You see, 5 pullbacks into this supply zone here. That means this zone is now used up. That's why we saw price
Used.
breaking above. The sellers, they couldn't hold the price
Okay.
anymore. That's why the buyers pushed back up. And when price came back now to that zone, you see what happened?
It goes
It's
up
now
again.
a buy. You see?
Yeah.
You understand that part nicely, yeah?
Yes, 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 yes.
Good stuff. So that's it. I've shown you a fresh zone and a non-fresh zone. Price has already pulled back into it at least once. That is this area here and this area here. And this is a used up zone. So you need to be really careful trading up a used up zone. And then we need to highlight an original zone. To conclude, I need to highlight an original zone. Let me see which chart is offering an original zone. We need market which is trending, whether it's to the upside or downside. No, there's nothing here. Where's gold? Let's go to gold. Weekly. Nope, there's nothing there. There's nothing here. Euro JPY. Right, there we go. Euro JPY. Let me open a new chart for Euro JPY. We've got an original zone there because that's the only one I haven't highlighted. So Euro JPY daily. Let's see. Options. Euro JPY. I'm gonna zoom in. Right. Remember, an original level is an area on the chart or a zone that has been created out of nowhere and does not have any reference point. If you look on this chart here, we've got this up close candle. You see this candle here?
Okay.
This is a daily chart, Euro JPY. Market is bearish, but during that bearish momentum, we get an up close candle. What you have to do once you have noticed that, highlight the candle, preferably the body of the candle. You highlight the body of the candle in most cases. Don't highlight candles that have got, like if it has got a huge wick or a long wick, disregard the wick. We are more interested.
Big. Okay.
Yeah, we are more
In the
interested
body.
in the body. So now this is a original zone. So when market comes back here, we look to be what?
Sell.
Sellers. You see? And also the body of the candle, it needs to be a what? At least a bigger size. You see? Yes, this is
Okay.
for illustration, but it's always good to highlight a candle that has got a bigger body, because it means there was more buying or there was more selling in that candle. Because small bodied candles, it means there wasn't much selling or buying.
Okay.
Yeah. So now I hope you have understood what a fresh zone is, and non-fresh, used up, original zone, and how you validate a zone. We use a semicircular return to a zone. We also use bullish and a bearish flag return to a zone. A sharp impulsive move away from the zone and then a sharp return to a zone. We don't trade that type of a zone because it's highly likely not to hold, and then price will just keep going down. So do you have any questions?
Not, no, sir.
Not at the moment.
Yes,
So
sir.
I'm going to send you some charts, I think today or tomorrow, where I'm gonna need you to highlight. I'm gonna tell you whether it's a fresh zone or original zone, and then you can highlight
Okay.
on the chart and you send it to me. I'm gonna do that probably tomorrow.
Okay, sir.
Yeah, but the notes, I'm gonna send you the notes just now.
Okay, sir. Thank you very much.
All right, my brother. Sleep well.
Okay, you too, sir.
All right.
Have
Good
a
night.
great evening.
Thank you.
Okay, sir.
Bye bye.